Joining us, there's a little poll for you to do while we're getting going. We're just waiting for the 100 people to join us today, but have a go at the poll while we're waiting for everybody to join. What impact do you think Libra will have on financial inclusion? Okay, and I can see some familiar faces joining the webinar. We've got Michael Jer joining us, MD Ashraful and MD Rashid. We've got Joyce Nambasa, Enongi, Douglas Miller as well. Just to mention a few of you joining. I'm going to close the poll in just a second. So for those of you that haven't yet voted, please do. We've got very little to none leading the way at the moment. Are we all very cynical about the impact that Libra can have? Or very educated professionals who have got some challenges to it? Let's give you all a little bit longer to cast your votes. Okay, 10 more seconds to vote. And I am going to close the poll now. And we can see your initial thoughts, so they got close. Very little to none won that poll there. But there's quite a few of you on the webinar as well, 8 of you who thought maybe a lot and 5 who thought certainly a not. So maybe there's going to be some impact, maybe there's not, but that's what we're here to discuss today. So there's been a lot of hype. It's been one of the most interesting discussions we've had so far on the LinkedIn group. Lots of comments, lots of debates on that. And I know it's also been pinging away in lots of your WhatsApp groups that many of you are part of. So I'm really pleased that our 3 DFI founders, David, Gavin, and Ignacio, have taken the time to join us today to share their thoughts and their opinions on Libra. So thank you very much, and thank you to all of you that's joined up and listening to us today. I'm going to start by asking each of the founders what they voted in the poll and why, before moving on to hearing a little bit more detailed on their views. So David, you're on the top row of my screen with me, so I'm going to start with you. What did you vote in the poll?
So I voted maybe a lot. And that's based on, of course, an understanding of what I mean by financial inclusion, which is not about getting people accounts, but about broadening the usage people can make. And so I would argue, and we can talk more about this, that Libra offers some potential for people to do a lot more than they currently can do for people who have accounts. So with that understanding of inclusion, that was my vote.
Great, thank you, David. And Gavin, did you vote the same, or is that something different from you?
I'm way more skeptical in its ability to put a dent into the 1.7 billion unbanked. For me, I don't think that they quite understand the ecosystem that they're facing to get there. So I voted no.
Okay, Gavin and Ignacio, there's a 2-1, 1-1 going on here. Which side are you going to vote on? Well, I'm just going to try and unmute you, Ignacio. I think you're unmuted.
Yeah, sorry. Of course, the right answer is depends. It depends on what you mean. But I mean, the direct impact, I mean, do I think that Libra itself will be transforming? Probably not. But it's significant in that it opens the way for many other innovators in the future. I think it's the first in a sequence. And someone somewhere will get it right. What's the chance that Libra will get it right? Very low. Someone will. And I would say it's no different to mobile payments. You know, M-Pesa was the first successful after rows and rows of unsuccessful mobile payments companies. You know, the road was littered with dead bodies of companies that tried mobile payments until it's successful. So I think it's indirectly successful simply because it motivates us to keep trying. But will they get it right? I doubt it.
Well, we've got three kind of different views already just from our founders. So I'm sure when we start to hear what some of you guys as our alumni think, we're going to have some even more interesting debates. We're going to go through the webinar and look at three particular areas. Firstly, Gavin is going to talk a little bit about how Libra might impact and work within the existing payment systems. David's going to talk a little bit more about regulation and jurisdiction and those kind of issues. And finally, we'll finish with Ignacio talking about what the impact on financial inclusion will be. So to help us moderate, because we've got a lot of you on board with us today, and a lot of questions, no doubt, just please ask that you use the Q&A function, please, which is in the bottom of the screen, so that we can keep a record of all your questions. And hopefully we'll get round to answering them all. But if we don't, we will come back and make sure that we do sort of send an email around to everybody with all of the answers for anything we haven't got round to answering. So now we've set the scene, let's hand over to Gavin, who's going to start us off and talk a little bit more about what impact and disruption Libra would have on the payment system.
Thanks, Sarah and David and Ignacio for the opportunity to have this interesting debate. So, you know, what gets me excited about Libra is its potential to disrupt the existing payment system. Let alone work within it or on its rails. And I thought the best way, you know, for us to see the opportunity for disruption is just to compare Facebook to, say, MasterCard and Visa to better understand what is the opportunity of the Facebook network versus the network that MasterCard and Visa already have, and what the key difference is. So, you know, first of all, the key difference is Facebook has got direct relationships with these customers, with some 2.3 billion Facebook accounts. Some are fake, some are duplicated, etc., but it's quite a big number. Within that 2.3 billion accounts, Facebook has a direct relationship with 90 million businesses that have Facebook profiles. And this is data from TechCrunch. And the opportunity in that 90 million is that only 7 million of those companies are currently advertising through Facebook. So there's, you know, even just in the Facebook network, there's plenty of opportunity for growth within Facebook. But keep those figures in mind, 2.3 billion, and of which 90 million are merchants. And Facebook has a direct relationship with them. When we look at Visa and MasterCard, they have around 25,000 financial institutions that they have a direct relationship with. Those financial institutions issue around 880 million cards on the MasterCard side and around 1 billion cards on the Visa side. Between them, they have around, say, 40 million merchants globally that are accepting those cards. And that's data that comes out of Statista, which is who I use for card-based reporting information. So just by looking at the two of them, Visa and MasterCard don't have direct access to the end user of their product, nor do they have access to the end business of their product. And yeah, we have Facebook that has a direct relationship with both. So the opportunity for me is, from a disruption perspective, is quite big for Facebook. But in which way? First of all, the price or the business model is interesting. So the price or business model that they're talking about for their partners is as near free to the end user as they can get to. So it'll be free to transact, which is going to be interesting when we start seeing their cash in, cash out models and how they transfer the currency or home currencies into Libra. But you know, what they talk about as a business model is that this 100 companies that are going to contribute will share in the interest earned of the float, which again is going to be interesting, and I'm sure David will cover that, is because in many markets you're not allowed to earn interest off an e-money float. So where is this interest going to come from, let alone be distributed amongst members net of operating costs? But in the simplicity of the business model that they're talking about, there might be an opportunity that makes it, you know, that cost effective for businesses and customers to transact with each other, that it creates an e-commerce ecosystem. You know, what I see that they'll be able to compete with in the big global payment space, I think they'll be able to there's an opportunity for them to disrupt domestic P2P, because that doesn't exist in many markets like it does in Kenya, or maybe as Venmo is growing in the US, etc. But globally, it's quite difficult. I just came back from holiday in the US, and all my friends there wanted me to Venmo them money in exchange for restaurant bills and things like that, and I couldn't do it. It wasn't interoperable. So potentially this is an interoperable global currency that will allow for P2P domestic payments to kick off a lot easier. More so, I believe, than international remittances. So I think international remittances, I'm with Xavier on this one. The jury's still out as to how effectively this would compete in the international remittance space. But I think really where the opportunity is commerce, commerce in such a way that will rival eBay, PayPal, and definitely rival the Visa and MasterCard networks. By having 90 million businesses in a network and 2.3 billion consumers in a network, just a portion of that very quickly becomes an opportunity to create a new level of a commerce platform, or the final link, I suppose, in selling products on Facebook is connecting those users. But still, remains to be seen. I don't believe this financial inclusion rhetoric that they've got on the top of this. I'm very keen to hear what David and Ignacio think. I don't believe it. I don't believe the hype or the spin that they've put on it. And insofar as looking at the membership that they've put together, the initial 28 members, I found it very interesting who's there. So Mercy Corps was a real surprise for me. $10 million investment to have a vote. Women's World Banking, maybe less so a surprise. But even the way that they put the membership into the PR and the news, all of those financial inclusion and development brands are at the top of the circle, having the payment brands down the right, and then a mixture of fintechs and commerce platforms at the bottom. Just says to me they're focusing a bit too hard on this financial inclusion message. I wonder, what is Visa and MasterCard getting out of this? They can't buy more than one vote, so they can't influence the way that it goes more than 1%. They've got a 1% influence in the association. And so I think that they're there to better understand what's going on, to see to what degree this becomes an opportunity for Visa and MasterCard to continue growing their network versus this is a disruptor. Back to you, Sarah.
Sorry, just having trouble unmuting myself there. I'm in the office next to Gavin, so I'm trying to mute myself while he's talking so we don't get too much feedback. So really interesting there, Gavin. I mean, it's interesting to see who did join up and start to become a member of Libra, and like you say, surprised by some. I was quite surprised by Visa and MasterCard joining up there as well. Looking at a couple of the questions that have come in so far, some of them are related to regulation, which I'm going to pick up again when we start to move on to that topic. But Fahad has asked, was there a better way to launch if you were Facebook? Was the launch and the hype done well? What do you think there in terms of that, Gavin?
No, I think that they've done it in a very good way. I think there's only one thing they could have done better, is somehow shown some level of regulatory support, which I didn't see. Show some central bank that is standing up and saying, I'm with you, right? Whichever it was. Or even some level of consultation with regulators or licenses. There seems to be, for me, in the rhetoric, a level of arrogance that comes across to say that we're going to do this, or we are able to do this, regardless of the legal or regulatory frameworks in the multitude of countries that we need to consider. But that aside, I mean, look what they've done. They've brought in financial inclusion brands, development brands, mobile network operators, massive payments processors, and those that use commerce, everyone from Lyft to eBay to Uber, etc. All of the competitors, well, all but the Chinese competitors, are in this initial 28 members. So I think they've done an incredible job in PR, standing up and saying, I've got the backing of the entire payments industry, and I'm launching this payments product. and I'm doing this for all of these good reasons, being financial inclusion, therefore I must be a good guy. But seeing it come the other way, it remains to be seen. But there's a missing link, David's link.
For sure, and I'm going to come on to talk to David about regulation in just one second, but I think we've got a couple of questions that are interesting coming up related to this. So we've got Kim on board with us today, who are suggesting that perhaps Visa and MasterCard can provide an on and off ramp, i.e. converting Libra to fiat. Do you think that's a role they may play?
Yeah, so they both have this. They both have these peer-to-peer transfer products in their rails, but Visa and MasterCard don't offer that direct to the market. They offer it through financial institutions, through their 25,000 financial institutions, and that's really, really fast, right? The ability to send money card to card off the MasterCard Money Send, and I forget what Visa calls it now. The other way to look at Visa and MasterCard as potential rails is Facebook are talking about, Libra is talking about being able to process 1,000 transactions a second versus Bitcoin 7 transactions a second. Well, first of all, if you're going to face a market of 2.3 billion consumers and 90 million businesses, 1,000 transactions a second is not going to cut it. Visa processes 30,000 transactions a second, right? So in terms of rails and scale and global infrastructure, there might need to be Libra considering using the rails of a MasterCard and Visa to get to the kind of scale to serve the market that they're at. So there's opportunity there. But if I were Visa and MasterCard, I'd say not a chance. I'll treat you like another currency, like another country, and I'll treat your consumers as issued products to use our rails, but then you also need to adopt our business model and our revenue models.
And I think it's going to be interesting to see how those how it plays out, really, isn't it, Gavin, with the Visa and MasterCard involvement and the rails and understanding more. I guess as time goes on, we're going to know a little bit more. Because at the moment we're still not 100% sure how these things are going to be happening with them.
Yeah, and not only Visa and MasterCard, right? We see eBay and PayPal in the consortium, but this will set up a direct competitor to what eBay and PayPal enable: commerce and abilities to pay and wallets to pay. So it's going to be very interesting to see how it plays out. If it plays out, already. We see the brakes being put on, so it'll be interesting to see how it plays out.
And we've got an interesting question here from MD Ashraful about the exchange rates. So how any ideas of how that's going to be managed across cross-border transfers?
Look, they've got a good plan there. But again, they're thinking more developed market. They're not thinking developing market. They're not thinking emerging currencies and the emerging currency risks. So, I mean, for those that haven't seen what they're doing there, is they're taking 6 of the world's largest currencies and they're pegging the Libra against the blended movements of those 6 currencies to create something that's a lot more stable. So it will be stable, it will be stable against those 6 strong currencies. But if it's a financial inclusion story, those consumers are not using those 6 strong currencies. They're using domestic currencies. So the South African rand, for example, has fluctuated 30% against the dollar in the past 18 or so months. So that means my Libra's value has fluctuated by 30% up and down. So what I can buy for a Libra today will be very different to what I can buy for a Libra tomorrow versus quite stable against what I can buy in those developed markets. So there's an opportunity again for banks, Facebook users to transact with each other and businesses, but really developing market financially excluded. How are they going to handle the risk of currency fluctuation against the Libra? Domestic currency fluctuation against the Libra.
Yeah, and I think we'll come back to probably, in the second part with Ignacio a little bit more about, who will the users be and whether that will include more people from the bottom of the pyramid or not. One of the questions that's also come up from a couple of people as well that I'm interested in your thoughts on, Gavin, are privacy, trust, use of data, and also reliability. I know a lot of us couldn't use our WhatsApp and images and etc. on Facebook. There was a bit of a global crash. So is there concerns because Facebook's involved and we know the data scandals that happen, etc.? What are your thoughts on that?
I think we should leave that for David. So I'll give you a short, response on that. The short response on that is Facebook is saying that they're putting this into a separate vehicle to protect your data against, or your data from being, your financial services data from being used. I think that remains to be seen. As we know, if you are a Facebook user, you are the product and not the customer, and your data is being used. So I wouldn't trust my data is not being used.
Great. Well, I think let's pop over and hear some thoughts from David in that case. Let's hear a little bit more about these regulation issues. There's quite a few regulation questions coming in, David. So what are your thoughts on the regulation side, the data privacy side of Libra?
Sure, Sarah, thank you. And afternoon, or whatever it is, morning, afternoon, evening to everybody. And I have seen some of those questions. Fahad, I've seen yours, which is that normative question: how should Facebook handle government and regulatory pressure? But to get there, maybe let's just talk through a little bit some of the more descriptive situation first with regulation. So what is going on? How are governments and regulators responding? And let me start by finding some common cause with Gavin here, even as we're going to tease out the shades of difference in our opinion, which is I also think that the inclusion aspects are greatly hyped in the launch. And that's a common thing that we see, right? Cloaking a new launch in inclusion features as a way to try and buy kind of a better dispensation with regulators, because this is a public policy objective which you'd think they'd want to achieve. So I agree that that's totally overhyped, and we'll come back to why I have perhaps a slightly more positive opinion about what it could do later on. So on the regulator side, what are regulators saying at the moment? Well, at the moment, it seems like from the public statements, they break in the way that they break around cryptocurrency generally. So what you find is regulators like the Bank of England or the Fed in the US, which have not prohibited Bitcoin or anything like that, being cautious. They're saying we need to understand more. We want to talk more. We want to find out what's going on. And then you find those regulators such as India, and I imagine China, although I haven't seen a public statement out of China, those who ban cryptocurrency or discourage it strongly, saying we don't like this. And in India, there's a cryptocurrency bill, which I understand would give them the power, at least, to prevent Indian users from using private cryptocurrencies such as this. And then what we have that's interesting, and it's important from a regulatory point of view, is some of you may have seen the US House of Representatives. The Finance Committee came out, I think yesterday, the chairperson came out with a request for a moratorium from Facebook. In other words, go slow, don't rush this because there are too many issues at stake. And why that matters is because, as many of you know, the whole issue of Facebook, much more generally than this is just one Facebook initiative. And of course, it's broader than Facebook even, but Facebook is under a lot of scrutiny. And of course, its core business is under scrutiny here in the US of Congress and other agencies. And so in many ways, how it plays out here in its home market will ultimately probably determine how it plays out elsewhere as well, because its core business could be threatened in ways that may cause it to regard this as just ancillary. So the real question is, what can regulators elsewhere do about this if they don't like it? And the answer is, well, we've kind of seen a version of this with Bitcoin, which is what they can do is apply pressure to the exchange points. So that's the usual strategy in countries that don't like cryptocurrency. They find it very hard to stop people using cryptocurrency. Very difficult to enforce that, even if the law, like India's bill, says that, very, very difficult to enforce. So instead, what you do is you squash the regulated financial providers who provide the exchange points, conversion from the national currency into this Libra currency and vice versa, without which it's pretty difficult to get hold of and pretty difficult to use in the country. So that's the traditional kind of approach if you don't like this from regulators. there is an additional feature here with Libra, which makes it perhaps more interesting than Bitcoin, which is with Bitcoin, there's no way to go if you don't like it. There's no home jurisdiction which is in control of Bitcoin. It's an algorithm, permissionless, as we all know. Whereas in the case of Libra, there's somewhere to go, right? That somewhere is Switzerland, which is where the Libra Association is domiciled. So in the case of Libra, at least there is a home country notion where it all originates from. And what's interesting about the home country is, of course, not only the branding of Switzerland in terms of its privacy regime, in terms of its private banking reputation, which probably adds some brand luster and things like that, but also it has a pretty enabling environment towards cryptocurrency and in general towards fintech. So I looked into this a little bit, and as the home country, Switzerland has recently passed a fintech law last year. And what that does is it essentially allows companies like the Libra Association to operate as non-banks, at least up to a threshold. It's not a big threshold, it's $100 million before they would actually have to become banks for the purpose of doing what the Libra Association is really doing, which is essentially being a global e-money issuer. Now, Switzerland doesn't have e-money specific law like Europe does, but at least under this fintech law, they've got some dispensation that would get them started. And you have a home country jurisdiction, which is actually really interested in promoting fintech and cryptocurrency more generally. And that's to their advantage. However, again, Gavin, I agree with you in terms of their launch. I think pretty slick in terms of lining up all those nodes and partners. But why wasn't the Swiss central bank there saying, you know, we're pretty happy to have this bunch here? So I assume that's because they're being cautious. And Switzerland is certainly subject to pressures, even if it's not in the EU. It's subject to influence and pressure from the EU in particular around its financial regulation. So we'll have to see how that plays out. So, Sarah, perhaps lastly on this normative front, the question we should be asking is, what are regulators concerned about? Because that would be the answer to questions like Fahad's about how should they handle the pressure? Well, of course, the answer is by addressing the risks about which regulators are likely to be concerned. So let's look at what they shouldn't be concerned about, right? So certainly based on the paperwork, that's all we have, the description of the association, it looks like they don't need to be very concerned about safeguarding of e-money. Libra follows all the best practices in terms of the association safeguarding the issuance of e-money and only, for example, depositing the money which it receives in exchange for issuing that in safe assets, distributing across a currency basket, and so on. So all the signs there are, safeguarding is not an issue, right? Equally, privacy, to one of your earlier questions, that probably is not an issue either, because unlike many payment systems where all sorts of personal data is transferred in the course of a payment, in the case of Libra, that will not be the case. Of course, there will be personal data on the wallet side, the issuer side, but not in the course of the payment transaction itself. So in many ways, the concerns around privacy for the payment system itself are probably a lot less. However, there may be concerns about operational risk. We need to know more about how this new language, this move language and the proposed blockchain actually works. And that's where the regulatory technical specialists would have to look at that and say, what are the risks around this? Nice that some of the world's biggest tech companies are standing behind it reputationally, because you assume they'd be pretty embarrassed if that did indeed get hacked or if it did indeed go wrong. And if I were a regulator, I'd want some indication of what liability they would assume in a case like that. So even operationally, it doesn't feel like that would be the biggest risk. So what is the concern? Is it AML, like some of the questions I've seen Douglas's in the Q&A? Is it AML? Well, maybe, but remember, again, because of the way Libra works, the main AML issues will come for the wallet issuers and those who are doing exchanges. And that tends to be like with Visa and MasterCard. You don't regulate Visa and MasterCard from an AML perspective. You regulate the issuers. You regulate the banks that issue debit cards and credit cards and so on. The same would apply here. And so in some ways, the AML concerns are really as strong as the concerns that you might have around CDD and the process of issuance of wallets and bank accounts in any particular jurisdiction. So what's the real concern? Well, I think the key here lies in a recent paper issued by the BIS, which I would commend to all of you who have an interest in this topic. The BIS, the Bank for International Settlements, published a paper before Libra was launched on big tech in financial services. And they worked through what are the risks here. Well, first of all, actually, they look at what are they doing, which in itself is really interesting because it's very variable, very different in China from the US, say. And obviously payments is one of the most active spaces for big tech companies entering, whether they're Amazon or Google or now Facebook or equally Alibaba or Tencent in China. What the paper really boils down is the concern is primarily around the unknown here. And the unknown relates to the strategic questions around competition. So it really does boil down to concerns over the fact that Facebook starts with a dominant market share, as Gavin was alluding to, massive scale already. And it's unclear what that would look like and what the effect would be on other payment systems and on other banking systems. And so this unknown competition effect, I think, is likely to be the biggest concern to be assuaged. And frankly, that's pretty hard to assuage. Maybe that's why Libra or Facebook has been pretty wise in getting Visa and MasterCard on side for the launch, because at least they are saying, we seem not to be too worried. Exactly why, as Gavin speculates, we need to think about. And I've seen Kim's comment, I think it is about being rails and maybe the fear of missing out or whatever. But at least Facebook could say, well, they're not concerned, so why should you be concerned, regulators, over some of these competition effects? So that, I think, is pretty much the nub of the regulatory issues, Sarah, as we understand them today. It's these bigger questions around level playing fields and competition into the future, which I think are raised by the entrance of Facebook into this field. And if I were advising them, back to Fahad's question, how should they handle this? I think they would need to paint some scenarios of what does the future look like if this really takes off? And what does that even mean to say if it takes off? Does that mean a quarter of our 2 billion users use it, for example? What would that mean for payment systems in countries across the world? What would it look like for countries with weak national currencies that aren't trusted today, where people might prefer to hold Libra than to hold the national currency? What does that mean? And I would use those scenarios to talk through with regulators what the fears might be and therefore how they might be addressed.
Thanks, David. And actually, that was one of the questions that that had come up. You know, do we think people might be, you know, preferring to actually use Libra because it is a more stable currency? I'm not sure whether, with Jeremiah, you know, looking at how people save in maybe US dollars or gold, for example, do you see that as a viable thing for Libra?
Sure. I think one of the segments, so if we look at where it's likely to appeal, certainly in countries where the national currency is weak or volatile. Gavin, you mentioned the Rand, but the Rand's fluctuation compared with certain other currencies which don't even fluctuate but are barely accepted, certainly for international commerce, there might be an even stronger case for the adoption of Libra by citizens in those countries. And that's what raises the concern about what does that do for the domestic currency.
And I think there's another question that kind of links back, coming back through to your central bank, you know, I mean, and the impact it might have on currencies. You know, are partly central banks responding the way they are because they maybe had plans to launch their own digital currency, and this is potentially confusing that issue or making that more challenging for them?
Yes, well, it's a good question. And I think there's no question that in places like China, that's explicitly a declared aim. It also is in Sweden today. And it seems like India may be heading down that route as well. So part of what some of the legislation, like India's bill, I understand does, is prepare the space, or rather preserve the space, kind of like governments already do around notes and coins, where they normally say there is a monopoly issuer, that's the central bank. Only the central bank of a country can issue notes or coins in that currency. Maybe they're trying to do the same with digital currency to try and stop private competitors from circulating more broadly.
So do you think that the regulators that have come out and, you know, like the US, the UK, or even its extreme as India, do you think that they need to be more open-minded? If you could recommend that they would sit down and chat with the Libra?
Yes, I do. So I do think there would be benefit in doing that. Now, again, I can't believe that Libra would not have had some of those conversations already. Again, they haven't been able to get the endorsements prior to launch, and I don't know their strategy there about how far they would have gone. But yes, I definitely would say it's worth looking at this. So even in countries with weaker currencies, I would say, look at this, because what are you ultimately trying to achieve? To defend a national currency or to promote a means of securing income for your citizens that could allow for cross-border payments in an increasingly globalized gig economy type world, which, as many of you know, is a world that interests me a lot as we've been pursuing this concept of iWork, where cross-border payments, micropayments that are cheap and reliable and trusted are an essential part of allowing income streams, where people in parts of the world that don't have them could generate them in future. So for those reasons alone, I would suggest that central banks have a reason to at least talk further, at least pin down the real risks of what's at stake here relative to current alternatives. And I think they would find, if they look hard, it's not a lot worse than the current situation. And it's largely about these unknown unknowns about what future playing fields will look like and so on.
I'm reminded, David, of our super platforms conversation that we had not that long ago, our webinar there. And one of the questions I posed to you then, is how are these super platforms impacting on financial inclusion? And you talked about not the user who's buying things, but the person who's able to sell the commerce. And Gavin, you also spoke about commerce today. So is that how you see this playing out in terms of having an impact on financial inclusion?
Well, sort of, that's how I hope it'll play out. So that's where I'm, again, very much with Gavin around that use case around P2B, the micropayments for merchants, in particular, making it easy for small merchants that might never get acquired for Visa or MasterCard purposes because of the business models involved in acquiring them, just too expensive, that it might be possible for them to accept payments. So in terms of the whole set of possible inclusion use cases, that's the one that most interests me. It's really the cross-border remittances, as Gavin says, that's already quite competitive and it's questionable how far this will go. But if they can make an impact into the P2B space, cross-border and domestic, that would be a compelling inclusion use case. And that's where, again, to make common ground with Ignacio and his earlier comment, I think that, Ignacio, you're right, it's the disruption that'll come on top, that as not just super platforms, but a whole range of others can develop on top of this to provide other financial services to these merchants using cheap and effective and reliable payment rails, that the game for inclusion would get really interesting. That remains to be seen. That's not Libra's game plan, but somebody else's using Libra could make a real difference here.
Great. And as we move into the last third of this webinar, I'm going to hand over to Ignacio and try and hear what his thoughts are. So you have different views, but I know also have a real passion for financial inclusion. So what do you think, Ignacio?
No, I think the fundamental views are very much aligned with what Gavin and David are saying. The subjective prediction may be slightly different, but the fundamental views, I would say the same. I've been asked to make my comments around financial inclusion. Of course, one should not be categorical about financial inclusion. I mean, even if it just gives account to two people, it's two more people are financially included. So I take the question to be, does this reframe financial inclusion? Does it create an inflection point? Is this a disruptive approach towards financial inclusion, or is this just one more, at best, an incremental improvement? Well, I mean, let me just say, purely in terms of disruption, this would be disruptive if it was permissionless. Because I think the main barrier to financial inclusion, I mean, the reason why we even talk about financial inclusion is not so much that people don't want accounts, is that banks don't want customers of those kinds. So what would truly be transformational from a financial inclusion point of view is getting the banks out of the way, which is not, I don't mean by that eliminate banks or it's just that you actually don't need to be offered service by a bank in order to participate in the financial system. And that's the promise of permissionless cryptocurrencies like Bitcoin. Of course, I mean that there's many other issues that come with that. Libra have chosen not to be permissionless, meaning you do have to be signed up by a financial institution in order to participate, because some authorized institution needs to be processing your transactions, approving your transactions, just like banks do. So it's not transformational from that point of view, and I understand why they made that choice to go permissionless, completely decentralized. There's still security and scalability issues that are completely unproven. The 7 transactions per second that Gavin was referring to that Bitcoin has been handling, maybe it's twice that, but it's nowhere near what Visa does. So is it transformational? Well, by definition, while it's permissioned, then it's not. Second, it could be transformational because it works on the same logic of an account with a financial service provider, but will it actually be easier to open accounts? Because if you just make it easier, it's fundamentally the same sort of logic, but easier, then that would be transformational. But that hinges squarely on the regulatory issues. Yeah, I mean, you can posit the future where having these Libra accounts is so much easier than getting bank accounts or M-Pesa accounts, but you have to wonder, why will the central bank be more lenient towards this scheme than any other? So, you know, I don't see any reason why they will be given special dispensation from KYC documentation rules that have proven to be quite an important barrier to financial inclusion. The third consideration I wanted to give is, will people find it useful? And by it, I don't mean the account, because fundamentally it's no different to any other mobile money account, but rather the currency that comes in it. So the difference between this money account and pretty much any other digital account there's on offer today in most developing countries is that this one is not denominated in your fiat currency or national currency. It's denominated in this international basket that they're going to concoct, some combination of euros and dollars, etc., which Gavin also was emphasizing. Does that make it more attractive? Well, from a financial inclusion point of view, for purely domestic transactions, I have a hard time thinking that that's actually useful for people, much less something that I would recommend that they do. You know, if I get paid on Monday in shillings, please don't advise me to switch from shillings to this basket of dollars and euros and yens or whatever there's Libra until Friday, when I sell that to buy the kilo of rice back in shillings. I'm incurring a lot of exchange rate risk. So I have a hard time seeing this as a good financial inclusion mechanism for day-to-day domestic transactions, which is what hits the mass market. That may actually be precisely what's needed in particularly screwy countries where fiat currency has no trust, maybe Venezuela, maybe Zimbabwe, but that's the exception, not the rule. As long as you are paid mostly in domestic currency and your expenditures are mostly in domestic currency, it's very difficult to advise people to be in a different currency in between. So for domestic day-to-day transactions, short-term savings, borrowings, I would not advise that because you're incurring a lot of exchange rate risk. So by default, then, the interest of this has to be in international transactions, which would happen today in euros or dollars. So the idea of creating some basket of those and averaging them out would seem to make a lot of sense. So I fully agree with Gavin and David and many of the contributors on the forum that there's going to be mostly for smaller international transactions. I agree that remittances perhaps is a bit over-exaggerated in terms of the impact that you can have because of the competitors of the market. E-commerce, a real opportunity, but I would say a fairly untested one as to the actual impact in terms of numbers of people that would all of a sudden be selling their wares in a global market. Yes, these Amazon-like platforms create a lot of opportunities, but they create even more competitors to me that they create opportunities, because in the same way as now I can sell to the rest of the world can sell to my customers as well. So I think it's good, but we'll see what the bottom line impact is that. But let me mention a third international transaction use case, which I think in practice is probably going to be the more significant one, which is capital flight. And I think someone, maybe it was Kim, mentioned that in the comments. It's like, well, I mean, I want to have a hedge against country risk in my own country. I'm going to save for the longer term some money out of the reach of the local authorities, out of the local currency that can be devalued, and I'll feel better off. But by definition, there's really not. We're not talking base of the pyramid. But to the extent that capital flight becomes a dominant use case, that of course is going to raise even bigger red flags to the regulators, because that creates monetary instability. And I can tell you, as being national of a country that had a very close to a financial crisis, with the global financial crisis in 2008, where it looked like all our banks could fail. If I'd had an easy way to send all my money out, I mean, I definitely would have taken it. But then, of course, if everybody does that, it just accelerates the bank run. It accelerates the collapse of the local banking system. So regulators are going to be very, very on top of this use case. So those are 3 points. Let me just mention a follow-on of that one, is that from financial inclusion point of view, and I think it was David that mentioned, or maybe it was Gavin, this stuff is not useful unless you have a way to buy and sell your Libra, because it's shillings, it's local currency that you have. And of course, in the financial inclusion context, that means having agents who do it for you. That means that the agent's float account has to be in foreign currency, in this basket of dollars and euros. So I may be willing to take foreign exchange risk, but now you're asking all the agents in every neighborhood and every village to be taking foreign exchange risk. I mean, really? Will they, A, and B, should they, are 2 important questions. So I'm not seeing clearly that process. And let me just finish with 2 more things, 2 observations, obvious ones. One is you do need a smartphone to operate this Libra. So just keep that in mind. And secondly, in this consortium that was created for this Libra association of so many companies, there is no one there that is African. So you can say all you want about financial inclusion, but there is no African organization in this starting set of partners. In fact, even more weirdly, there is no Asian organization. Asia, where all the digital finance is happening, there's no Asian player per se. There is one from Latin America, Mercado Libre, a really small, exchange. So yeah, it's hard to say that developing countries are well represented. Of course, it's a bit papered over by having people with a global developing perspective, like Mercy Corps and Women's World Banking. And I see I'm being corrected. PayU is included in the consortium. And that's what, South African, is it? Yes. Okay. So 1. Sorry. Thanks, Kim, for that. So, put all of that together. It's hard to see that this transforms financial inclusion. But as I said in my first opening comment, you really need to see this as the first of 20, 30, 50 projects that go in this direction. So it's hard to expect the first one to have all the answers worked out.
I think it's really interesting, like a couple of the people who do agree with you, Ignacio, are central bank representations as well, looking about in regards with regulation risk. So it seems you may be on the same page of 1 or 2 of our central bank alumni that joined the call today. So a couple of questions that came up that I'm really interested in, and I'm going to open it up to everybody because I think all 3 of you can have an input here as well. But it's particularly, I guess, the base of the pyramid to start off with. So Ignacio, I'll put it to you first. Will people on the base of the pyramid, A, will they use it, and B, do they trust Facebook? Will Facebook be a brand that they would trust, and will that differ as you go up the pyramid? Will that trust change?
Well, I mean, as long as you use it strictly for real-time payments, trust is not such a big deal, because you earn it transactionally. I mean, I send money, it's received, done. So it's the closing of the loop is very quick, and you go tick several times, it worked. So I mean, that's generally why all those digital things start with payments and not with we'll store your money, store value, and so on. Yeah, I think Facebook can bring credibility, because ultimately it's not about will you manage my money wisely, but rather will you be there when I need you? Will the user interface be understandable, and so on? So I think they probably bring credibility in that space. Let me mention one thing, by the way, that I forgot to say on the issue of trust. The trust in terms of the store of value wouldn't be with Facebook. It would be with the this mechanism for backing the reserves that I think David referred to. And you might think that's great, but keep in mind of one thing. That's a really expensive way of buying trust. Backing 100% of the money supply, it's a really expensive way to maintain trust, because someone needs to have all these huge balances like just sitting there without turning it around, without using it for anything. You can't even get use it as collateral for loans because it cannot be touched. So it's extremely expensive. And so what you have to remember is that all the interest on those reserves is going to go to the people who put up the money, not for the customers. So this is going to be interest, not non-interest bearing. So that's another interesting thing to keep in mind. So it's not huge scope for speculation, because it's a stable basket of currency, unlike Bitcoin. At least I can hope for having a 10x return, because I'm so much smarter than everybody else. Here, you don't have that much upside from speculation, and you don't have interest. So I think the use cases here have to be extremely practical, solving people's direct problems now.
And David and Gavin?
What was the question again, Sarah?
About trust. And David, I'm going to pick on Charity's question, particularly for you, about recourse. I think that was quite interesting. If things go wrong, how does that work? So trust, and David, the recourse issue.
Go ahead, Gavin, on trust.
Look, I'm with Ignacio on this. I think the more affluent or the more developed markets that Facebook uses will trust it. I think that they will trust it if the transaction goes through and it's real time, as Ignacio said, they're going to trust it. I think it's going to take a hell of a lot for a unbanked poor consumer to convert their cash into Libra and transact with it. I think that's a big stretch of faith. And I think data privacy sensitive consumers won't touch it.
Yeah, I would add to that. Gavin won't touch it unless it's very clear what Calibra, Facebook's wallet solution, will or won't do. That, for me, is one of the areas I would like to know a whole lot more about. They haven't said much yet. In some sense, it's the next level solution, the wallet issuance, once you've got the whole scheme up and running, but that is a vulnerability. But just to Margaret's question on recourse, so I'm glad you made the connection, Sarah, to trust, because to me, the heart of trust is the belief that when something goes wrong, I can be put right. And that's why brands like Visa and MasterCard and PayPal tend to be trusted, because they've built the rules and the enforcement of those rules among their members and their different parties involved, such that you can see that in general that tends to happen. Now, it remains to be seen. Obviously, the Libra Association has not yet put out any rules. They put out a brief statement indicating that they intend to protect customers. Clearly, the brand association suggests that there would be a strong interest in doing that. It would certainly taint Facebook's brand, although many would say it's already tainted from a consumer, at least privacy trust point of view. It's never been tested, though, from an operational test point of view, because Facebook is not, unlike e-commerce site, it's not really yet an e-commerce site. It has a marketplace, but that's small. It's largely a social media site, and that has very different issues of trust and recourse that are involved there around what you have to take down and what can be said and so on. So I think it remains to be seen what those rules will look like. I, for one, will be looking very keenly to see how they would be enforced. And obviously, you could only expect them to be done through online dispute resolution primarily, given the scale and the multinational jurisdictions involved here.
On Calibra, by the way, which is, as you say, David, is Facebook's own wallet product. I just have a hard time imagining that Calibra will go around getting licenses from 50 regulators in Africa and setting up operations and licensing and incorporation and customer care teams. So my expectation is that Calibra will reserve itself on the juicy, bigger English-speaking markets to the extent possible, and let everybody else go after the other markets. So I don't expect Facebook would be fronting it from a contractual point of view, although they might be fronting it from a user interface point of view in markets where there's financial inclusion is a big job to be done.
And I think that sort of kind of connects in some way to Douglas's question here, about what countries, might take up and might have some challenges, with Libra. So, for example, some countries have limits of requirements on documentation for Forex. Will some countries not be particularly attractive for Libra to operate?
Oh, yeah. But I think, isn't the issue not so much Libra as the wallet issuers themselves, Calibra, the equivalent of Facebook, because that's where the requirements would sit. I think the closest parallel we have today is not really Visa or MasterCard, it's actually PayPal, right? Because people can open PayPal accounts from anywhere in the world today. You can do that. You just have limitations on your ability to cash out from those accounts, which depend on your national banking system, which is the point that regulators can apply pressure to. So I think we're likely to see that, which is Calibra, or rather Facebook, will definitely not go around. It's never done this. It's not even onshore in most countries in the world. What reason would it have to go onshore, especially in smaller markets with all the complexity? But then neither has PayPal done that, actually. PayPal's only selectively sought licenses in places like the EU to go onshore. And I think we'd see the same pattern here.
Okay. And there's an interesting question about how it's going to work. So we had Nasamul from Bangladesh ask, what are the capabilities of the real-time clearinghouse and interoperability of these payments?
Well, there is no real-time clearinghouse. I mean, that's the difference from Visa or MasterCard here. There's a blockchain which will operate, it says, in an innovative way, which we don't, at least I don't, yet fully understand. But there's no switch involved here. There's a blockchain which instead is replacing the function of a switch like Visa or MasterCard, which is directing transactions to different places where they're then maintained on proprietary ledgers in banks and so on. So that's one of the big differences in this case compared with conventional payment systems.
Yeah, so it's like a distributed switch. There's no one place where it all comes together. But yeah, interoperability rules, will be worked out on the side. So if I have a Libra, offer Libra service and M-Pesa as well, then you can build the bridges yourself for your customers.
Gavin, did you have anything to add to that?
No, just that it's still unclear. Neither the real-time nor the interoperable solution, it's just unclear.
And I'm just going to take this final couple of questions that are connected from Jeremiah before we close with a final poll to see whether anyone's views has changed on Libra. So what about the idea of data protection? I mean, there's a couple of questions that have come in there from Jeremiah. Is this, David, is this something that you would be able to comment on about people's concerns?
Sorry, just trying to unmute there. I haven't seen the specific question about data protection, but that is one of the concerns listed in the BIS paper, for example. And by protection, let's be clear, it's much more than just data privacy. So privacy is one aspect of protection, But protection is a lot broader than that. It's about the ability to change or corrupt data en route. And that's where Libra's claim in its white paper is the use of these cryptographic protocols, which have been well established, and Bitcoin and other cryptocurrencies have shown us that there is a good deal of security in the protocol itself in terms of protection. The vulnerability sits often at the exchange level. And so if we're talking about data protection, I would be concerned particularly at those vulnerable points of exchange. You know, in Bitcoin, it's been the exchanges that have been hacked, the wallets that have been hacked, where the losses have occurred so far, not in the transmission process itself, at least so far.
Great, thank you very much, David. Have you guys got any final thoughts that you want to share before we launch our final poll?
None from me, other than to say I'm very eagerly going to watch this space.
And my question to you both as well is, are you going to sign up the minute you can?
I'm going to sign up, but that's because I usually sign up for new offerings like this to try them out, right? And in my use case, I would like to test whether this is better than existing remittance options I have for small remittance payments cross-border. That would be my test in my segment. And so, yes, I will.
I will, yeah, definitely, and for the same reasons, is not to say that I'll stay on though. So to use it, but to see it, experience it, but not to say that I'll stay on.
Awesome. Well, I'm going to share with everybody the next poll, the one that's almost the same as the one at the beginning. I'm just really curious to know whether any of the discussions we've had that have changed people's views. So now, what are your thoughts on Libra impacting on financial conclusion? Are we becoming more positive or more cynical following this conversation today? Let's give everybody a minute or so to look at the vote for the poll, and then we'll conclude the webinar. But while people are voting, I'll just say thank you very much to David and Gavin and Ignacio for joining us, and also I think that we had over 50 of you joining us today for the discussion. So it's great to be able to interact with our community and chat with you and debate about some interesting developments in our sphere. So I think we're all basically going to have to keep an eye on the space. None of us are 100% convinced, but there is definitely some interesting disruption that Libra is bringing to our space. And the hope that that disruption may lead eventually and help us along the bridge to financial inclusion. So I am 75% of you have voted. I'm going to give you just another 10 seconds. If you haven't yet voted, please do. Excellent. So the majority of you have voted, have spoken, and let me share the results with you. So I'm not sure, I think we maybe have got a little bit more cynical as the discussion continued. Maybe all realizing that perhaps Libra itself might not have the impact that its hype potentially suggested. But interestingly, more of you seem to still think that you need more information before making a judgment. So perhaps we're all hedging our bets maybe with the central banks and saying we need more before we'll approve or agree. David and Gavin, any last thoughts before we close the webinar?
Not from me.
No, just thanks to everyone. This is a topic to be watching, and I'm hoping that those who've done CIDM and other courses feel well equipped to engage in what I hope will be lively conversations in all the countries of the world, because at least it's a topic that's worth discussing. Let's give Facebook credit for that, bringing some practices to the table that have stoked controversy and a worthwhile conversation.
And pushing the frontier, so absolutely.
Great. Well, we'll continue the conversation in our league group on LinkedIn. So for those of you that haven't joined up to our league group, we highly recommend. It's the League of Digital Finance Professionals in LinkedIn. If you search for the term, you'll find us. That's where the four of us are going to be continuing this conversation. So we hope to see you all there. Thanks, everybody. Bye-bye.